Hey traders, welcome back to Trade Empire. Today in this video, first of all we will explain that how to apply smart money concepts on the chart, step by step, to make a well-informed analysis. Next, we will show you our best trading setup, based on smart money concepts. Let's start our video after a short intro. Back to the video. In our smart money trading plan, first we have market structure and direction. This involves determining the key levels of the chart structure and identifying bearish, bullish, and sideways markets. Next we have optimal trading zones and order blocks. These areas present on the charts can provide us high probability trade opportunities. Next we have the liquidity concepts. We know that liquidity acts as fuel for market movements, and it's crucial to identify where the positions could be liquidated to prevent unnecessary losses. And in last, we have the entry setups and managing our trades. Once certain favorable conditions met, and we find an entry point, we execute our trade with specific order details. And also managing open trades requires monitoring market conditions and adjusting it for potential success. And this smart money trading plan consists of two major time frames. First, we have the higher time frame, where we do our general analysis, like reading the market structure, identifying key levels, finding market direction, identifying liquidity areas, finding fair value gaps, and optimal trading zones. Then we move into the lower time frame for additional confirmations and to execute our trade. But remember one thing, this trading plan is not only limited to these time frames. You can choose whatever time frame you want, but your lower time frame must be at least 2 times lower than your higher time frame. But in this video, we will use only 2 time frames combination. If you analyze the market structure and find optimal trading zone in for our time frame, then you will move into the 15 minutes to find extra confirmation and entries. And if your higher time frame is 1 hour, then you will move into the 5 minutes time frame for entries. Our first step in this smart money trading plan is to analyze the market structure and higher time frame. And in this analysis we implement the market structure concepts of smart money to the chart to find the market direction and key levels. When I say direction, it means we have 3 types of markets trends. First, we have the uptrend, where price continuously makes higher high and higher lows, and creating a series of break of structures to the upside. So when market is in an uptrend, we always look for long opportunities, because it increases the chance of success. Next we have the downtrend, where price creates break of structures to the downside, and makes lower lows and lower highs. And we will only find short opportunities when market is in a downtrend, as it increases the chance of winning. Number 3, we have a sideways trend. In this situation, the price is not in uptrend and not in downtrend, but it moves in a box. It happens because the buyers and sellers are not strong enough to move the market in one direction. And our smart money trading plan is a trend continuation strategy. So, we will not trade when the market will be in a sideways trend. We will trade when we have a clear uptrend or downtrend. Here on the 4-hour gold chart, let's apply the first step to find market direction and key levels. We can notice that price is in a downtrend and making lower lows and lower highs. So the market sentiment is bearish, and we will only look for sell opportunities. And these are 2 of the recent consecutive lows. So, we will mark the higher point of this corrective move as swing high. As price will stay below this swing high, our trend will be considered as bearish. And our second key level is this swing low, which we will use as our higher time frame target level, when we will take position in lower time frame. But what if price break this swing high to the upside, and makes a valid change of character? Then we will no longer be in a downtrend, and our current market trend will be considered as bullish. And now we just have to wait for a break of structure after this change of character to make sure that our trend has been shifted. After that, we will mark our new key levels and look for long opportunities. And this is all we have to do in our first step. Let's move to our second step. The key concepts of smart money. In this step, we will identify the fair value gap, liquidity areas, and optimal trading zones in higher time frame. The fair value gap is a three-candlestick pattern, characterized by a significant gap between the wicks of the first and last candle. The bigger the gap, the better it is, as these gaps between these candles are created when we have imbalance between the buyers and sellers in the market. And market often return to these gaps to fill the remaining orders and restore the balance. And then if that time, market have enough liquidity, then it will seek to continue in the same dominant direction. We all know that liquidity is the fuel for price movement. Liquidity areas on the chart are where retail traders take positions and place their stop losses. Here on the chart, market is in an uptrend and just created these equal lows while moving upward. And equal lows and equal highs are the greatest liquidity areas. And if market grabs the liquidity from these areas, then the chance of success will automatically improve. Best trading zones are areas where strong trading concepts overlap. Valid order blocks and order flow areas that follow the rules are great spots to find trading opportunities. Here on the 4-hour euro-dollar chart, we have a moving uptrend. And we have this fair value gap that recently created by the price. And if price returns to fill the gap, it will provide us a great trading opportunity to go long. But here's a question: where is the liquidity area? We know that this area was our previous swing high. So, if price comes to this level, the resistance will turn into support. And we believe that price will reverse from this point. And many traders will ignore this demand zone and set their buy order at this support level, which creates a lot of liquidity at this point. So the big players will grab the liquidity. And then the price will move upward after eating many of the stop losses. So that's why you have to identify the liquidity to avoid unnecessary losses. And this valid demand zone is our optimal trading area, where we will execute our long position with big players. And our chance of winning will significantly increase. Step 3 is confirmations and entry in lower time frame. In this step, we will apply the market structure concepts in lower time frame. We will wait for entry signals and then open our position. When price taps into our optimal trading zone, we will look for any reversal signal to confirm the entry. We will wait for a change of character to confirm that the short-term downtrend is over now, and price will continue its overall uptrend. And if price did not change the character, then we will not execute any trade, as it may lead us to a losing trade. But here we have a change of character confirmation. Now we have to entry trading models. In first step, if price creates change of character and leave a valid order block with fair value gaps, then we will set our order just a couple of pips above the order block, stop loss below the order block, and we will target the recent high of lower time frame. And the second target will be this higher time frame key level. In second step, where we do not have any fair value gap and valid order block, we will apply the Fibonacci retracement tool from the start of this wave to the end, and set our order between the 0.786 and 0.618. We will target the recent high as our first target, and next target will be the higher time frame nearest key level. Here is the checklist and important information about this trading plan we use. You can risk to 2-3% of your capital per trade, and only have open up to 3 open trades. But remember, before using this strategy with real money, you should backtest it on past data to obtain the performance. That's all for today, guys. Like the video if it provided you some knowledge, and subscribe the channel for more trading content. Wish you good luck for your trading journey.